Good morning, traders and investors. Wednesday, November 12th, 2025. Triple D and I got a good show here for you. We're going to talk about the all important AMD guidance at an Investor Day event. We're going to give you a nice little summary of some of the factoids that Lisa Su and the company other execs dropped on the call yesterday. We're going to do some intriguing math that was sort of confirmed by a notable source a little bit later in the session. Bill.com exploring a sale according to a Bloomberg report from late last night. Couple of earnings highlights for you. ON, Oklo, Jamia, GFS, also Circle. We're going to talk about the huge move in drug stocks yesterday. Also, some intriguing commentary on the jobs market and implications for AI from a notable source. We'll get into that a little bit later. Our guest today at 8:35 a.m., Tim Quast from Market Structure Edge and Modern AR. We got a good show here for you folks. Let's get it going on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, here we go. Getting kicked off on pre-market prep. We got the S&P 500 futures up here trading about 1/3% higher, around 24.50 higher, 6895, 6895. Let's call it 6896 here last trade. Let's do NASDAQ futures. Getting used to my trade station tickers here. This show charts brought to you by TradeStation exclusively. Looking at NASDAQ futures here, also trading up about a 6/10% over the 25, just under the 25,800 level. Let's do a real quick look at the small caps. IWM, Russell 2000 trading trading up about 0.2%. And let's do Bitcoin here real quick. One more before we get triple D. Bitcoin here this morning trading up about 2%. I'm looking at the IBIT. I'm going to pull my charts down here for a sec, and we are going to bring in the triple D trader. There he is. Dennis, how's your morning going?
I've got a sore throat. My kid was homesick yesterday. Now it's hit me as well. So bear with me here. I sound a little bit nasally. It's a little bit of a cold / sore throat. So we're going to try to fight through this for you here.
Fight it.
Yeah, that's where we're at.
Sorry to hear, Dennis. Hope everyone's feeling better in the household soon.
Yeah, the boys getting better. So hopefully it's going to be a quick one.
Hopefully.
Let's start with this AMD.
Okay.
It's the biggest winner pretty much of the day of all the mega caps here. And we were talking about this on Stock Trader Network at 3:30. We jumped in and did the math because they were giving us some metrics that we could do math with. And I love doing math. I love putting the CFA hat on and doing some grade 3 math. And that's what we were doing last night to come up with some numbers here for you. And then those numbers ended up showing up later on, the numbers that we were calculating, because Lisa Su started talking about these numbers.
Yeah, so
that's why stocks started popping up. So STN got some pretty good trades by buying AMD at the close.
I hope so. So let's go over some of the numbers here. So this call started at 1 p.m. Eastern time yesterday. If you're looking at your chart on AMD, around 1:40 p.m., there was a big spike higher. I think investors were reacting to a few comments here. We'll give you some highlights. First comment that kind of was starting to catch people's attention: total addressable market for AI computer chips, $1 trillion by 2030. Kind of a big number to like shock some people, start paying attention. We got some growth figures here, expecting data center growth around over 80%, with tens of billions of data center sales in 2027. For a little perspective, AMD reported Q3 data center sales around $4 billion. That was up about 22% year over year. They also said they're expecting 3 to 5 year annual sales growth around 35%. The current quarter, Q3, year over year sales growth was around 36%. Q2 year over year sales growth was around 32%. So that 35% number for the 3 to 5 next few years, is like kind of right around where the company already is. So Dennis, start taking us through some of this math, and we'll save a couple of the other little factoids that Lisa Sue and the company CFO dropped a little later on the call till after your math.
Well, so 2024 sales for AMD were $25 billion. So if we take the 25 billion and then we multiply that times, if they can hit the 35% next year, then you're talking like 34 billion. If they hit the 35% the following year, then you're talking about 45 billion. If they hit the 3-year target, we're talking about, $61 billion in sales. Now, if they hit the next 2 years, this is where the numbers get really interesting, because you start multiplying bigger numbers. You just get up to, and at the end of 2030, so if we just take this all the way out, Brentster, for the 5 years, if they can hit that 35% target, they would take their sales from 25 billion a year up to 112 billion dollars by 2030.
Mama.
So big sales numbers. Sorry. And this is the math that we were doing over on STN. So I'm like, these are huge numbers if they can actually hit these targets. And then I was like, the question mark is, can they maintain those margins? I asked that question in STN, and I was saying I was buying AMD at the close because of, looking at this math. I said, just maybe somebody, does the math after hours and stocks about on CNBC. Well, it wasn't somebody, it was Lisa Sue doing the math. So she came out afterwards, and if you see the huge pop in AMD, it was basically on one comment. And what was that?
And the comment, we think, I'm pretty sure the comment was on gross margins. Gross margins in the range of 55 to 58%. And Dennis, you were like, when you were doing this math, you got to like a level of earnings, you got to like a market cap kind of estimate. And I think when you were doing the, third grade math, like you said it, you were using just kind of shooting from the hip. You're like, I think 50% gross margin. We ended up hearing later that they're actually higher than that, at least according to Sue, 55 to 58%. All of these, sales, talking about the gross margin, I think AMD, the execs were ultimately trying to get to an earnings figure. And that was like one of the last slides for this presentation, a quote, clear path to earnings over $20 per share for AMD.
And that's what she said, and that really popped it off. We had done the math, though, so we knew that that's where they were going with this.
Yeah.
So, sometimes just doing the grade 3 math ahead of, when they're talking, you get ahead of it there. And AMD, and I know some traders who had some great trades on their Kirk in the STN room, a few traders, because this thing obviously is up, another 13 points here today. The math is, it's crazy. And if you start looking out and just extrapolizing on $20 a share in earnings, I mean, okay, well, at 10 times earnings, the stock's $200. Like, okay, well, it's not going to trade probably 10 times earnings, but just now, let's just go 20 times earnings. Then you start getting out to, 400. And if you start getting farther than that, then you start getting out to $600, $800 a share. Now, if we take just, that's that 55% number, let's ignore the $20, because she didn't really give a time frame for getting a $20. I didn't hear like by when. Did she say that?
I don't
But we were
think
doing
so.
the math on the 35%. So if she can maintain the 55% margins, which is a big if they can hit those 35% goals, which is a big out to 2030, that would give this company $60 billion in profits. So if we take that $60 billion in profits and give it a 20 multiple, that'll get you out to $1.2 trillion market cap. That's a 3-bagger. That means the stock is $400 billion right now. That means the stock can triple if they hit those targets by 2030 with a 20 multiple. If they give it a 30 multiple, which, it's currently carrying like a 40 multiple.
Yeah.
If they give it a 30 multiple, that's a $1.8 trillion company, and that's a 5-bagger from this point in time. So, you can quickly do the math here and say, wow, sitting here and actually doing the math, if AMD can hit the targets that they just gave, this stock is going to be a $1 trillion company by 2030, and it might be even, as much as 1.8 trillion if they can really hit these targets. So, I mean, when you look at it, a $400 billion market cap, it's a lot of ifs. These are all projections. Things can happen. There's going to be competition coming. There's going to be data centers, like people saying, everywhere. So, but with that being said, all we can do is take the math that AMD themselves just gave us. This isn't some analyst projecting. This is coming from AMD, which Lisa Sue has a tendency to be a little more conservative even sometimes than other CEOs. She's not Elon Musk. She is a little more conservative, if anything, and she's on CNBC here right now. But if she can hit these targets, there's a clear path for the stock to be $1 trillion company, and potentially much more than that.
Two things here. Lisa Su and the execs, I listened to a lot of the call. Lisa Su and the execs on the call yesterday were pretty darn convicted in transparency into some of their forecasts. Lisa Su was speaking very convictedly about hitting some of these targets. Of course she would. You
Yes.
know, like of course she would. Still, that being said, I mean, I've listened to Lisa Su talk a lot, and she was like last night, yesterday, she seemed like very convicted in having insight into how they're getting some of these numbers. And Dennis, you know, like from my seat, watching you go through, do this math, and think about all this stuff, you just like the conviction in your AMD thesis was justified a little bit yesterday when you
Yeah.
hear some of this stuff. So
Yeah, I haven't sold any of my long-term shares in my retirement account. I added it, obviously, I bought it multiple times, 95, 140. I don't know if I paid anything more than 140 ever. And I'm just holding on to all those shares. And people, saying, it's been a really good run. My average cost base, I've almost over doubled my stock here. It was
yeah,
the A in my acronym last year, which wasn't great. It's the A in my acronym this year, which was very good. So I'm sticking with it. I mean, if this math, and she's got it on CNBC here right now, the same math that we just talked about, hits, AMD is going to be worth a lot more money. Now, with that being said, Jay Rice with a fabulous question, and this is a comparison that we did as well. Oracle and Larry Ellison gave a lot of bullishness on their call too, and gave some potential projections out to 2030, and it gave us some crazy math too. Looking, at this stock was going to be a lot more money. Oracle has given all that back. Oracle has went down. So the market is, one, just thinking that maybe their projections were too high, or two, just forgotten about it. So, I mean, it's not necessarily true that just because a stock, raises guidance and gives you these lofty projections, that it necessarily has to go up. It is going up here right now. But in Oracle's case, the stock popped that day. That was the biggest pop and has leaked ever since.
sure.
So, keep that in mind. I mean, long-term investing and trading are two very different animals. If you go to the Oracle chart, though, I
Yeah.
think Oracle has now filled the entire gap. And I look at this and say, hey, if they can come anywhere close to these targets, Oracle is pretty darn cheap here right now. Now, again, there could be a lot of things change in 5 years. Maybe there's companies and businesses that we don't even know about coming to compete. So there's going to be continued, obviously competition coming into for all these AI dollars. But I'm looking at Oracle. I've got a small position. I'm thinking about adding to it today. So I haven't yet, but I'm thinking
Okay.
about adding to it today. I do have a day trading position in it though too, but I'm thinking about selling it out of my day trading portfolio and adding it to my long-term portfolio. So we will see what happens.
All right. Good luck. Good luck.
So
Do
that's
you
the AMD talk. That's the Oracle talk. And that's obviously your driver here of the day. That's the driver of the market, the big move in AMD here after hours. But it's funny, they give all these numbers in the conference call, and the stock doesn't really start popping until we actually start seeing Lisa Su spitting out these numbers in her commentary.
sure.
So I mean, this numbers were there. They were there like when the stock closed at $238. We had done the math 30 minutes earlier and saying, wow, this math is incredible if you actually sit down and do the math. The problem is most people just don't take the time to sit down and do the grade 3 math. And that's why it gives you an edge and gives us an edge over in the think tank at Stock Trader Network, because we're sitting there and saying, man, somebody talks about this after hours, the stock's going higher. It wasn't just somebody, it was Lisa Su. So rewarded for that.
Someone in the chat is pointing out a move in Amazon over just the last few minutes here. Just wanted to highlight, not a huge move, but about $1. There was a press release at 8 a.m. from Amazon unveils business. Amazon Business unveils next-gen AI solutions to help organizations and small businesses save time and money. I doubt that is what caused the move higher in Amazon. Do you?
I mean, it's just excitement here around the AI trade here right
Yeah,
now. So Amazon is up because AMD and NVIDIA, and you're getting Amazon into the AI trade here now. Most of your mega cap, it's a tech rally here today, tech driven. If you look at the Qs are trading up 0.62%. Amazon sometimes trades a little bit higher, so it's kind of in line. So I don't think there's
sure.
a big headline that's really driving the Amazon price here right now. It's the fact that most tech stocks are up here today. Most AI stocks are up here today. But I
Cool.
mean, this, moves like when you start just thinking back and extrapolating math. One stock that is moving here too, and the stock that we've done some math on too, is IBM. And IBM did announce more news here today. They unveiled their quantum Nighthawk processor. So they're looking at this targeting its advantage and using this by 2026. And Loon chip shows a path to useful quantum computers. I don't know what their Loon chip is, but they're talking about useful quantum computers by 2029. That is way sooner than everybody is projecting here. So IBM, which I've been saying is the safe way to play quantum, is up another 5 points to a new all-time high here again. IBM, three of my biggest positions in my long-term portfolio we just talked about: AMD, Amazon, and IBM. I mean, I think quantum is going to be significant. It's a matter of when. If 2029 happens, some of these other quantum stocks could get interesting too. The other problem is with the other quantum stocks are all cash burners, and how long can they survive without real revenue? That's the biggest question. We know IBM is a cash cow, and it could survive forever, basically. Here, nothing's forever, I guess, but for a very long time on their current businesses. So I always say IBM is a tech stock with a call option on quantum. Safer way to play it.
I like how you think about it, Triple D.
I bought IBM for the first time back at 240 in August when I gave these arguments here. So it's been pretty good. It hasn't done as well as some of the pure quantum plays because those things just absolutely exploded, but they haven't sold off like them either. I mean, IBM set up the highs. RGTI is now 55 down to 31. Looking at IONQ is 81 to 54. Are these the pullbacks to buy on these quantum stocks? Seasonality probably says yes, because I think we're going into a strong seasonal period for stocks. So, but I'd like to see a little bit of strength in them before jumping in. But maybe these IBM commentary can lift the whole sector. So keep an eye on your quantum names today.
Do you want to go to earnings? Do you want to go to the big move in drug stocks yesterday?
Yeah, let's do that. We're going to hit earnings here in a second, but the drugs are on fire, and this is helping my portfolio too, because obviously I recently put some more drug stocks and an ETF into my long-term portfolio about 2 months ago, drugs, because I'm like, these things are just too cheap. So, if you got a 5 to 10 year time horizon, I don't know how you go wrong with a lot of these drug companies trading 7, 8, 10 times earnings. So these are still, they're not going away. Novo was my most recent one, which I bought 3 days ago, a little bit too soon because it sold off after that, but it's right back up to where I paid for it. But there's just so much value here. Dividends, I mean, Pfizer's dividend 6.78%, Bristol Myers 5.08%. It's hard to think that these drug stocks, are not long-term buys at these prices. Now, again, we've had a pretty good run since I'm up 11%. I always forget the symbol of the one that I bought because I bought it in Canada and it's equivalent.
Oh,
but
yeah. You said it yesterday and I already forget.
I know. It's a smaller one, but the healthcare ETF. I mean, so the one that I bought is up 11% in the last 3 months. And I mean, if you just look at the XLV, that's about right, 130 to 150. Sure. So you can look, 130. So it's up 20 bucks on 13. It's up about 13%. So XLV from those August lows. It just got too cheap, man. These stocks just got too cheap. Everybody threw them out. Everybody was just buying tech hand over fist, and they forgot about the drugs. Well, you know what? The market's not forgetting about the drugs here now. It's thinking, holy crap, these things are starting to move. And sometimes, as an investor, you get paid to wait. We're getting a little bit of a dividend. We can sit back. Yeah, they've been leaking. Yeah, they haven't been the best place to be. But I tell you, drugs in the last 3 months have been a fabulous place to be.
Has the market also kind of like become jaded? We've seen this trend where the market has become jaded to things that are happening in the administration and kind of in the macro environment. And has the market become jaded to, some of their concerns with RFK Jr.'s stay in the office, right? So
Yes.
that we might be seeing a period of time here where, like we had this thing with the obesity drugs the other day, last week, and the stocks kind of didn't really react. So it's these little clues that we're using to try to get information about how the market is digesting information, and I think this is a little bit of an update for this space.
I think you're making a great point. Like RFK Jr. in there has depressed the space. People have been concerned
that was the huge concern.
And also Trump commentary, we're going to bring drug pricing down. We're going to bring it down. We're going to bring it down. Drug price is going to go down 1,200%. Remember he's been saying that, even though they can look down 100%. But I mean, when you're looking at it from that perspective, it's like, oh crap, he's going to put price caps. He's going to do all kinds of stuff. That hasn't happened yet. So none of that has happened. That could still happen. That is a risk. The Trump factor is definitely a risk of investing in the drug space. But also, as you continue to go further in this administration, he's focusing on other things. Maybe it's not going to be as bad as we thought. And that's why I think the drug space was really under pressure here. And now it's starting to turn around because we've depressed these stocks to valuations that they haven't seen in a long time. So, I mean, I don't know the last time Pfizer traded 7 times earnings. I don't know the last time Bristol Myers was 7 times earnings. So, I mean, you're talking about companies, think about you're paying, 100 times sales in some tech companies here. You got drugs, aging populations still that probably are going to, not go away unless, like I said, jokingly, unless, physical AI kills us all, a la Skynet, then, that wouldn't be good for the drug stocks because the bots won't need drugs. But I mean, if you believe that the human race is going to continue, there's going to be a need for drugs in the future. So I think prudent, not chasing though. So again, I would put the drugs on my radar here now because we've had a 12, 13% move in the last couple of months. But maybe you get that inevitable dip, which always seems to come. So, if we get a 3, 4, 5% dip in the XLV, we get a 3, 4, 5% dip in some of these names I just mentioned, I think it might be prudent to actually put on some longs. So long-term portfolio, I like the drugs.
This one's for Joel. I just drew a little horizontal line on my top right chart there. Watch out for that $26 level. Look, all these highs here back in July, back in end of August.
Brentster getting good with the technicals.
that was your grade 3 technicals.
That's it. Well, you know what? The grade 3, grade 4 can really analyze markets well. Support, resistance, trends, and grade 3 math take us on AMD. You're rocking if you've got grade 3 math. That's all you need. You don't need to be an astrophysicist. You don't need to be a mathematician. You just need to do basic math. And when you do basic math, sometimes you get paid.
You want to get into earnings here, Triple D?
Let's do it.
Okay, sweet. Take your dealer's choice. Where you want to start? I'm standing by to give you.
Oh, it's Oklo. We're gonna start with Oklo.
Oh, it's Oklo. For we're starting with the report that probably meant the least for the stock. I'm just gonna say it. Pulling up the chart here, put that on screen, and then I'll get you the data.
Yeah, we'll get it.
There's your nice Oklo chart. Okay, so Oklo reporting a loss of 20 cents per share. Estimate was for a 12-cent loss, a worse than expected loss. They didn't sell anything. So no top line figure, no sales to give you. When you have these companies that are reporting that are still operating at a loss, when you have these companies that are reporting and they don't generate sales, keep in mind that it is hard to react. It's hard for investors to react because there's no comparisons. We don't really know how, the sales figure was. There was no sales. We don't really know how the loss per share figure was, but there's the data if you want to use it. How's the stock trading this morning?
I mean, it dipped initially on the report, but we were talking about a low bar in this one because why is it a low bar? Not because it's got a high PE or it doesn't have any PE at all because it doesn't have any revenue. Because the stocks come from $193 down to $100. So, I mean, there was a low bar here. Stock tried to go down multiple times and the market just kept buying the dip here. So I think we're in, one, the buy the dip mentality market, but two, just a lot of oversold conditions and a lot of Momo names. And that's why we've kind of turned towards Momo names. I was saying it on Friday. I'm like, it's Momo names are very much oversold. So it won't take much good news to get them coming back up here. The buy the dip mentality is out there. So you look at Oklo. Am I putting in my long-term portfolio? No, because I don't even know where this is going. It's all just hopes and dreams still here. But is it tradable? For sure. So off 100, key support level. We have the low from 3 days ago, which is $98. So you can lean on that. And I think after hours, that's where we got to. So definitely getting support where you want to see. And the earnings were just fine. So I mean, if the earnings are just fine, that's sometimes okay when your stock is down 50% in a month.
And I think you probably picking out a good level here. You said $98 was the low from.
Yeah, and then after hours, I'm just grabbing the 4 o'clock low just after. I think we got down to 99.16. So we did get under 100 a couple of times, but we bound back. You can see the mentality here is buy the dip down in this market. It is back. It went away for a couple of days, but it's fully on back.
I'm getting a headline here, seeing Treasury Secretary Bessent saying we will see substantial tariff news in the next couple days. Market doesn't look like it's responding to that, but just a little heads up here.
Well, we heard about coffee last night, rumors that they were going to lower tariffs on coffee.
Oh, I didn't hear this one.
Yeah, and coffee. And if you see Starbucks just ripping higher here, it just went from 87
Oh,
to 88 on that Besson comments. I think some people are
there
thinking
you
about the
go.
coffee situation.
Good
So
call.
Starbucks, the bros, both of those are trading a little bit higher here, but keep an eye. That was the rumor last night. I'm not sure if that is what Besson is referring to
Sure.
here.
Yeah.
I don't know. Maybe they're going to talk about different tariffs. Maybe they're going to put on different tariffs. Who knows exactly what he's referring to? But that's commentary here that I think the market is guessing is for Starbucks, and Starbucks just ripped higher on those comments.
I think my overnight charting turned off on my left panel over here, so I'm gonna have to adjust that in a
Oh,
second.
you got to figure out how to do that.
Yeah,
Yeah.
I turned it on. I turned it on.
Joel's good at it. Joel will be back with us next week. We're still learning the TradeStation charts here, so bear with us here. Brettster, maybe you'll look at that and figure that out how to do the pre-market charting here. But it just popped up $1.50 on that headline. Starbucks trading up now $2. Is Starbucks a turnaround story? Well, you also have a double catalyst, as Kramer said it is, and Kramer said he would be buying the stock. He said it last night. So Starbucks was already a little bit strong off the Kramer segment, and then this coffee tariff stuff has popped at another $1. So I don't think Starbucks is my kind of stock, but I mean, from a trading perspective, I traded it last night. I think there is opportunities here on dips on Starbucks.
Sorry to distract there from the earnings parade. Which one you want to do next?
Circle.
Circle.
Yeah.
Circle.
Same setup. His stock has
Yeah.
a very low bar. I mean, it was $262 in July. It's now under $100, $94. It was all hopes and dreams, still all hopes and dreams. Stock is near where, well, it's not quite down to that $64.99 IPO price that it had back then. But I mean, we continue to leak here. Massively oversold though. So we can say, stocks went from 150 to under to $94 here in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days, 12 trading days. I mean, this is massively oversold. So there could be a bounce here, folks. Even though the earnings, give us the earnings and we'll analyze it.
All right. Earnings were pretty solid as far as I can tell. 64 cents doesn't look like it's comparable versus the analyst estimate. Sales do look more comparable, just under 740 million versus around 700 million estimate. The guidance looked solid too. They raised their 2025 sales guidance for the other category, 75 million to 85 million, now up to 90 to 100 million. And they also raise their operating expense guidance. So, you don't necessarily want the operating expenses going up unless you are doing some investment. Maybe the company is doing a lot of investing here. But another example, I think, where, the earnings kind of didn't really matter if the stock's trading down on a solid report, raised guidance. I think this is a case of the bar winning again.
Well, and I don't know if it is winning actually, because the stock is trading down $4, but I think it might start winning. So I would not be surprised if they come in here and buy the dip. Bring up the chart here, Brentster.
Yeah.
Actually, I can look at it as well here, just on my charts here. I'm just lazy and like looking at yours. Trying to see from last night. So Circle got as low, well, not much lower, 92.45 a half for an after hours low. So I mean, it's just kind of been hanging out in consolidation station. But you know what? I think institutional money managers might actually come in and buy the stock. I like this on the dip for a trade. I just think we're in that mentality here. Stock's down $4. It's was a darling just as much as 4 months ago. I think institutional money managers might actually come in and buy this dip. So I kind of like it.
Next.
It was
ONON?
Starbucks, just to confirm. It was coffee. So Besson,
coffee.
Starbucks spiking after Besson says tariff relief is coming for coffee. So
Okay.
substantial news and tariff relief coming for coffee. So that is Starbucks. Remember the bros too. So keep an eye on both of those stocks here as they're getting a little bit of love from Besson here this morning. On?
Sure.
Okay.
On reporting adjusted earnings, 54 cents. Sales, a very sharp beat here. Sales about 993 million. Analysts were down around 940 million. Guidance looking solid. Let me change the chart for you here. No, it doesn't mean a ton, but guidance pretty solid here. Guidance 2025 sales 3.725 versus a $3.64 billion estimate. On shares here this morning, trading up a good $3 or so.
Stock's been depressed too. Doesn't have to say much. When stocks are sitting down here at new 52-week lows, say anything okay, and stock probably pops. So the on report, pretty decent actually. I'm just 1 second trying to, like, I know you
Yeah,
just
no
said it,
problem.
but it's sometimes better if I just read it. I mean, beat
Yeah, for sure.
guidance kind of in there. I mean, this looks fine.
Guidance looked good.
So not
Yeah,
surprising it's
guidance
getting
looked
a
good.
pop. The issue on's going to have, along with Circle, along with, CoreWeave and all these other stocks that are beat up, is overhead supply. I mean, on gets near 40, it's a logical selling point. So I don't know how high it got here. After hours, I wasn't really looking at it closely. I can go look at it actually right now. But if we're just looking, no, we haven't been much higher than this. I think 40, like 39, high 39s is logical resistance. Breaking down through a big psychological whole number, I think get back up there. I think you find sellers. So hard to chase it here, even though the numbers were fine.
I'm in the background I'm trying to get my pre-market pricing going here real quick, but I am still.
Yeah, okay, keep working on that.
Yeah. What's the next earnings we want to cover though? I'm standing by with some more info
Let's do
for
Global Foundries, GFS. They reported earnings here this morning too. Yeah.
GFS, better than expected report. Guidance looks fine. Q4 earnings 41 cents, beats a 37-cent estimate. Sales 1.69 billion versus 1.68 billion estimate. Expecting Q4 earnings 42 to 52. Analysts around 46, so right in the midpoint there for Global Foundries GFS.
Stock again, so much, this bull market we've been talking about, but so many stocks in the gutter. Like Global Foundries is $60 back in 2024. It's now $34. You think about like Intel, how much of a reversal? Because I always kind of put these two a little bit together to a certain extent. Because obviously the foundry business that Intel's trying to get into. But I mean, you look at Intel and it's just all been government here. Global Foundries has not got the government love and has just lagged. It was one of the core business of Intel, how good it's really doing here. We know it's all been, Trump love that's really popped it up, but GFS just hasn't, got any love whatsoever. Near the lows, low bar, overhead supply, everything I just said to on applies to Global Foundries. It's hard to break these eternal downtrends here. So probably more people willing to sell just because there's so many people underwater in this name.
We are going to be getting Tim Quast here in a few minutes.
Awesome. Love
I
Tim.
don't see him yet, but just giving a little heads up. Market Structure Edge, also Modern IR. We'll get Tim's take on a few things here with the market.
Okay, awesome. Just before Tim, we go to Tim here with some commentary, and I don't know if Tim will come into this conversation, but I just want to bring it up. So
yeah.
We had the Starwood Capital CEO on CNBC last night. His name is Barry Sternlicht, and they were asking him about jobs, and they were asking him about real estate, obviously, because of what he's involved with. But what I found interesting is he was talking about. He says there is going to be some massive job losses in certain industries from AI. He's like, for instance, he was just talking about how they had just cut 36 jobs at their own company.
At his firm, okay.
Yeah, 36 jobs they just cut because they can pay ChatGPT $30 a month to do the same thing. And I'm like, that's a problem. So we've talked about this on this show about potential job losses in certain industries. That's a billionaire investor that just said it on CNBC. I mean, so it's not just my thought process working here. It's the fact that AI is going to replace a lot of jobs. And I see it too. I was like just looking, and struggling with my anniversary. And I was like looking at, writing, a poem. I literally just type in ChatGPT, write a poem, gave it a bunch of parameters, for the poem. And it spit out like a Hallmark card of all Hallmark cards. Like for real.
Yeah.
Like just blow it away. Like that's unbelievable. Tailored, obviously very, to your person.
Yeah.
In literally 5 seconds.
That's
Don't
perfect
tell me
because
there's
you're
Hallmark writers that aren't getting fired.
That's perfect. Your wife loves ChatGPT,
she does
right?
it to me too. She subscribes and she uses it all the time. Like when she's writing something, she just ChatGPTs it.
Yeah.
I mean, there is definitely going to be some job losses in certain industries and massive job losses in certain industries. So I think, that is an issue that we're going to have going forward is there's going to be some new job creation to manage these AI systems. And then technology companies are going to be killing it, but there's going to be some companies that are like literally going out of business because of AI. So, figuring that out, is a job that we're probably going to be doing in the Stock Trader Network think tank, like trying to figure out which businesses. Also, and again, Barry Sternlicht has been spot on this. He was on CNBC last year, and he was talking about office real estate, and he says office real estate is in a lot of trouble, and his biggest short idea was Alexandria Real Estate, which is ARE.
ARE, right?
He said this last year, and I can remember the segment, and he said, I would be short the stock. I am short the stock.
Let's see what the chart
$120
looks like.
a share it was then. It's now 1 year later, $54. So fabulous call by Barry Sternlicht. And to take that a step farther, they asked him about it, what are you doing with it now? And he says, well, we called around and we, talked about covering the short because it's come in so far. But then calling around, he says, I think at this point in time, it's not even about the business. He says the business of office real estate is just in shambles. But he said specifically that he thought Alexandria Real Estate may now be getting into a balance sheet problem. So he is not covering the short and staying short. So take that with what you want. This was said not by me, by Barry Sternlicht on CNBC last night, but he's talking about, potential bankruptcies in this industry. So this is office real estate. He also talked, and he gave a stock pick, and he's on the other side of the spectrum. There was a rumor about Centerspace yesterday. It came from Bloomberg about Centerspace getting bought. They asked him, and he said that's a stock that we own, and that's a stock that he thinks somebody takes it out. They do apartment buildings, is what CSR does.
Yeah, apartment land.
You logically think about that. If people are getting tighter for money, maybe they sell their homes, go to apartments. I mean, it's not a bad place to be. So I like that idea, of CSR long. Again, it popped yesterday on, rumors of a takeout. So maybe you want to wait for a pullback here. But a 4.71% dividend, apartment buildings probably going to continue to be in demand as, obviously people need shelter. So he's short office real estate and long apartment buildings. Not a bad place to be.
Not a bad place to be. We do have Tim in the background. He said he can't hear us though, so he is swapping his machines. Maybe he can hear us now. Let's see what he said.
Yeah, he can hear us now.
He's giving us the thumbs up
because we could even get the market structure on some of these stocks here. So bring Tim in. Let's see what supply and demand look like for these companies.
Let's go. Tim Quast, Market Structure Edge. Good morning, Tim. You are on mute. I'm not sure if you know you're on mute, but a heads up. How's your morning going? Let's see if I can unmute you. I can't unmute you. He's giving us hand signals.
It's just the mute in the StreamYard. So in the StreamYard itself, if you look down in the bottom right corner, you are muted in the actual StreamYard. Bottom left corner.
It could be on his hardware somewhere.
Yeah, there's something muting you because you can see your mic is crossed out here.
Yeah,
you can even see
and
it,
I can't unmute. It says can't.
We're trying to. It says you can't unmute yourself. He's gonna go. Tim's gonna go try to figure this out. He's gonna go to the background, try to figure this out. So we're gonna put Tim back to the background. We'll continue to carry it. Tim, we'll go overtime for you, so don't worry. Get her figured out and come on back.
Yeah,
so he's gonna come back to us in a minute here.
Okay.
So don't know why that was happening. That's a weird one because usually we can unmute when we see that, but we can't.
I don't know.
So,
doesn't always work.
No, it doesn't always.
Want to do another rumor here from this last afternoon? Bill.com. We didn't talk about Bill yet, right?
No, we have not. This was getting rumors breaking from who was breaking this?
Bloomberg.
Bloomberg broke this again yesterday. Said they're looking to sell themselves.
Company exploring a sale.
Company exploring a sale. Big pop for Bill.com. Company that has very much struggled as well. Go back to the monthly charts. Stock was $348 in 2021 when everything got just completely stupid. It's $46 to close yesterday, but up to 52 here today. Does it get a sale? It might. But a lot of times these rumors don't materialize. You've done the math here before, Brentster, and it's 2/3 of the time that, on even like really, great sources that these rumors don't materialize.
Yep.
So rumors are rumors. Potentially it does, but often, the prudent thing is to sell into pops on rumors. I think you got major resistance up at 55. Is a takeout coming at 70 or 80? This isn't a stock that a company is firing on all cylinders here. It's a company that's kind of been struggling a little bit. So I don't know, man. I think I'd be more of a seller than a buyer than sitting around here waiting for the stock to get taken over.
Here's that 55 level over here in the top right chart, somewhere around there. But then if we had our pre-market pricing in here, we'd see the stock trading around 52.50 right about now. I mean, that is right about here. So you do have a few levels up here to kind of keep in mind. We'll have to see how this thing opens. If it opens over or under 52.50, I think that could make a difference for today. Let's see how Tim's doing. Tim looks like he's back. He's smiling. He looks happy. He looks friendly. Let's do the intro again. We'll do the intro again. Here we go. Try this one more time. Tim Quast, CEO, Market Structure Edge. Is he there?
Take two, and it's working. I wish I could take two all the time. If you could get a do-over routinely, I would
in the market
personally. Yes.
Imagine you get a do-over in the market. How
good to see you guys. I'm sorry I'm peering down on you. I had to swap to my Microsoft Surface. For whatever reason, the primary machine refused to cooperate.
You're fine.
Yeah, well, it's good to see you guys. It's been a while.
Tim. I know. I think it's been like a couple months, maybe.
It has been. Yeah.
How have you been doing? How's the market been treating you?
It's it's always interesting. It's good.
At the least.
Our model portfolios continue to perform really well. We've launched these focused momentum and low volatility portfolios for our Edge subscribers, and they have performed very well. So we have no complaints whatsoever. It's endlessly fascinating, however, to me, what occurs in the flows.
So Tim,
Dennis.
AMD has been the talk of the day. Lisa Sue's been on CNBC here. They're talking about 35%, sales growth here for the next 3 to 5 years. They're talking about $20 in earnings. But what really moves price in the short term is supply and demand. So I would love if you could bring up Market Structure Edge. Take a look at, supply and demand for AMD, because this stock is the talk of the day.
I agree. And that's what I talk about all the time. So bear with me a second. That the fact I wrote about it today in the
nice.
weekly blog about flows, and why is it that analyst days, and AMD just had an analyst day yesterday, and earnings, and why do those things cause volatility? And I describe them as interruptions in flows. That if the market is essentially an autonomous system, and money does what it does, and then something that is time related. An earnings report is time related. An analyst day is time related. It's like putting a boulder into the stream, and it interrupts the flows. And it's in some sense contrary to how the market works, right? It's just today the market is dominated by the automated commitment of capital all over the planet. But if we look at let's look at AMD, and I'll show you flows. So I heartily concur, Dennis, that what you want to focus on is the flows over the fundamentals. I wish it were not so. I think a market that is pegged to fundamentals is a more honest market. But
it's not a market. It's a dishonest market.
It's a dishonest market. In many senses, it is. The great illustration of that to me are the international markets. Look at Japan. So Japan is trading at all-time highs, having last year surpassed its 1989 previous high. And the Japanese economy is smaller today than it was in 1995, 30 years ago.
That's crazy.
Right? At the time, it was 16, 17% of global GDP. Today, it's less than 3%. And the market's at 51,000, the Nikkei. Italy's the same size it was in 1999, all-time record. DAX, German market. The German economy is in contraction, all-time record. So what matters is flows over it's a dishonest market in the sense that you can't count on those markets to tell you what the underlying economies are doing. To AMD, is the economy of AMD reflective of its equity? Well, sure, in the sense that it's up 70% over the last year. By the way, if you just own it when it's over 5, you could capture all of those returns in a third less time. That's alpha. If you're taking the same risk as everybody else, but you produce the return in a third less time, that's delivering alpha, and it's very difficult to do. Looking at AMD, for those who haven't seen this before, by the way,
Yeah.
you can sign up for our free daily market desk notes at marketstructureedge.com. Just, I write them and our market strategist writes them. So here is AMD. It was at 10 from October 9 to November 4th, right ahead of results, right?
Forever.
And look at those massive gains. There's closing price. Supply declined right at October options expirations. So when people set their derivatives positions, they were long, actually. But then demand declined. So you could say, well, here are people who speculate on the outcome. Here is BlackRock, Vanguard, and State Street, who are now overweight AMD, and the flow slow. And I would argue that their risk management systems often sidestep events because volatility creates tracking errors. If you're an index fund or an ETF, your objective is to track the measure. It's not to beat it, it's to be it. And so if there's a boulder in the stream that is going to disrupt your tracking exercise, you may sidestep it. You just take AMD out during this period and demand declines. And you think, well, price is going to reflect these extraordinary financial prospects that AMD reflects, but it doesn't.
Yeah.
And it's because of flows. And look at this, the supply side is now rising. We call this convergence. When demand falls and supply rises, what do prices tend to do? Decline. Now, it might be a short-term event, but that's what the data indicate.
So probably a little bit of profit taking into here. I mean, it's been so good for so long here too. A stock goes from 80 to 270. They don't go straight to 500. I mean, like it's probably, a little bit of like, buyer exhaustion happening here to a certain extent in your charts.
Exactly. If you were to, I could have clicked one button there, but let's say you were going to profile. This is a blunt instrument, but to this point, if you wanted to produce most of the returns in AMD, let's back up. If we go back to, call it December of last year.
Sure.
And we'll just say December 2nd, and we generate, what this model is saying is own it when it's over 5, and when it drops below 5, get rid of it. So in that period, and over that time, AMD, if you bought and held it, is up 67%. But if you just did this, it's up 66%. So you can capture all of the gains, and look at this, in 166 days instead of 237. Now you have the spread between that and an additional 30 days to do something else with that money. You could invest in something else, put it in cash, whatever you want to do. But it's a great way to think about the impact of flows. The market does best when it's over 5. When it drops below 5, tends not to do as well. Well, sidestep those events. And why is this true? Because the dominant force in the market today is flows, not fundamentals. And again, wish it were different, but that's what we've got.
I want you to do Oracle here too, just going and looking at this, because Oracle had a similar setup 2 months ago where they came out with some crazy guidance. The stock gapped up enormously and has leaked it all away. So it's one that I have on my shopping list, but I don't want to be too early on this either. So I want you to, talk to me about when the hell I strike on Oracle, because I think long-term it's going to be a good buy, but short-term this is completely out of favor right now.
I agree. And you can see what happened to Oracle, and everybody did bet long. You look at the supply side, look at this, right ahead of earnings. Their short volume was 23%, but realize this is not short interest. Short interest in the S&P 500, 2%, right? But that's a 1974 metric. So we apply some proprietary treatment to it, but this is Reg SHO short volume. And so the market tends to run half and half. It's 50% long, 50% short, just like Citadel. So here ahead of results, everybody expected the price to pop. The problem with that for Oracle is here your core BlackRock, Vanguard, and State Street stock. You're consistently above 5. Money sidesteps the report. Everybody bets long. The stock pops, but now you're out of the IVV, VOO, SPY. You're out of all those baskets. And so it gives all of it back. This is what we counsel public companies about with regard to earnings. You do not want to create tracking errors. Do not draw attention to yourself with earnings, because while it may make a short-term audience happy, it will cause you to be skipped over by the forces that have all the money, right? That's the problem. Over the last 5 years, the supply of shares of IVV and VOO, S&P 500 tracking instruments from Vanguard and BlackRock, have increased 30%, right? Meanwhile, the stocks of the S&P 500 have declined because public companies have bought back $4.5 trillion of their stock. So the core for a public company trying to create shareholder value is you want to capture IVV and VOO. You don't want to try to capture Capital Group. Capital Group's a net seller. It keeps $5 billion of cash in the Growth Fund of America because it has redemptions. Whereas Vanguard's total stock market index, VT-SAX, has negative cash. It has no outflows. People aren't redeeming it. They're putting money into it. So for Oracle, the lesson is don't do this. Just say we reported results. Thank you. Goodbye. And for traders and investors, when you get that pop, take your gains, not chances. Soon as you see demand decline, you're out. You're gone.
Tim, you mind doing a few more tickers here for the chat?
Sure.
Okay, awesome. Christoph Marin asking about SanDisk, SNDK.
Oh, yes.
What a stock.
What
talking about this.
What a space.
This stock has been one of the best stocks out there in the market. $50, $271 in 2.5 months. This is an incredible move.
Yeah, it really is. Let me see if I can find it this way. Where is SanDisk?
SNDK.
Yeah, and I'm not pulling it up for some reason. I don't know why.
They changed ticker symbols at some point in time. I'm wondering if your system maybe didn't.
Yeah.
That's okay.
That's a major get. Well, Christoph,
go get SanDisk in there.
We will correct that by tomorrow.
It did. It changed symbols, and I can't remember when. Do Micron. Micron, similar business. Yep. Not as great of a move, but still pretty awesome.
Just refresh. There we go. Okay. Yeah. So once again, here's a stock that's been poundingly above 5. Just look at the green part of the graph. And it's at a 10 now. It hasn't dropped in 30. We default to 30 days, and then we'll expand out. Look at this. Big decline on the supply side and very, very strong demand. The only reason price dropped day over day here is because there was an uptick in supply. But that's a great, that's an awesome stock. Our focused portfolios picked that up quite a while ago. It's just math. It's quantitative. But that is exactly what you want to own. That is diverging demand, where demand is very strong at 10.0 and the trend in the supply side is down. And if you could pack your portfolio with that kind of equities, you will perform very well.
TJ Mosley wants you to take a look at a couple of the Momo names. Maybe let's just do MP Materials.
Yep.
I just bought that recently in my long-term account.
Okay. Let's see. Well, it's a good entry point. Now, short term, this is not great because it's a 1. Yeah. And supply, since this is pegs, again, these are important things to know, traders. The reason that monthly options expirations matter is because they're used by the money that dominates the market, the flows, the passive money, indexes and ETFs. Now, short term, 0 days to expiration options, they have notional value daily of $1.5 trillion. It's more than the entire equity market's trading, but all the gamma is consumed in a day. So these things matter. Right here is where money was very long, but then shifted short right here. And so you see the supply side rise. As a trader, short term that if demand's at 1 and supply is rising, it's going to be difficult to produce sustainable gains. And if you back up, you can see this. Once again, when should you own MP? Dennis, in your long-term portfolio, 1 is a great entry point, right? You're buying low.
Unless it stays at 1 for a long time, because then it's continuing to go down.
Right? But you can see it again here. When it's over 5 and hitting 10, the stock price performs very well. When that ceases, the price stops rising. Demand returns, price rises, demand fades. It's not perfect, but it's a very good indication of what occurs. There are short-term ripples in that, and there are events that can affect it. But it's just a good central tendency. But in a long-term portfolio, it's better to buy a 1 than a 10, right?
Well, we're buying dips and not, sell. So basically, when you're buying a 1, you're buying the dip. When you're selling a 10, you're selling the rip. And I've always been a big
There you
fan of
go.
buying dips and selling rips.
It's the best
So,
strategy.
yeah, well, but the buy the dip, I've always said, is the best strategy in the history of the stock market. I mean, if stocks tend to go higher over the long run, you're constantly buying dips, you're probably going to outperform the market.
Exactly. And it goes back to flows again. If public companies are consuming their own stock while the supply of ETFs increases, it's like a currency. So if you have more currency chasing a shrinking supply of goods, it will necessarily have an inflationary effect on markets. And that, look, we take advantage of it. Whether we like it or not, it is essential to understand those characteristics.
Tim, let's do one more here real quick. It's CoreWeave. A bunch of people in the chat asking about CoreWeave. CRWV. You're chuckling because I'm sure you're not surprised that people are asking about this one.
No. Great numbers again. But once more, if you look at the difference between this and MU, right? Micron, very sustained demand. The demand really died right into options expirations in October for CoreWeave. So it doesn't matter how good your numbers are. If BlackRock, Vanguard, and State Street, I'm just using them as a type, aren't the buyers, it's very difficult to realize a return from good fundamentals. If I were talking to CoreWeave, I would tell them, emphasize your value characteristics here. Why? Well, maybe you get added to some value portfolios, and then that can lead you back to your growth characteristics. But for traders, again, this is not a great time. It just hit 1 and supply is rising. Price could go down further. I'm not saying it will, but that's what the math would indicate. Now, for a long-term portfolio, maybe you do want to buy it at a 1. But short-term, this is not the thing to trade.
Tim Quast, we're going to wrap it for today. That platform that Tim was using, marketstructureedge.com. Tim, thanks for joining us today.
Always good to see you guys. Thanks very much.
Awesome. Thanks, Tim.
Have a good one. Later. All right, Triple D, let's get a word from our sponsor, Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance and computing, including AI, operating with nearly 0.5 gigawatt of renewable energy. Hive is on track to capture 3% of the world's Bitcoin production by the end of this year. I'll put up the chart in just a sec. Triple D, scan the QR code in the bot here. I'll pull up my chart here for Hive. There you are.
I got it here.
There is a QR code in the bottom right corner of the screen right now. You can scan that to go over to hivedigitaltechnologies.com, or you can click the description in the link of you can click the link in the description of this YouTube video. Thanks again to Hive Digital Technologies for sponsoring Pre-Market Prep. Triple D, we got a minute or two here before we're going to wrap, and we're going to go over to STN. Got any final thoughts to kind of wrap up what we've talked about?
Well, you got to keep in mind the House. So we just got confirmation the House is going to be voting at 7 o'clock tonight to end the government shutdown.
Okay, 7
so it's important. I believe it is going to pass. So at 7 p.m., the algos don't price in anything. So I would not be surprised tonight if we get a little initial pop on that. Does it sell off after? It might, but I think on the initial, it's going to pass, you probably get a 7 or 8 or 10 point pop on the S&P futures. So I might be playing that into the vote. That's, strategies for tonight, though. For today, mixed market. We definitely have a tech running market. AMD leading the way, up $14.50 here right now. NVIDIA and the AI trade very hot today, too. Obviously, you're going to see weakness in consumer staples. You're going to see weakness in utilities. You're going to see weakness in oil stocks, and you often see weakness in financials sometimes as well. Stocks have been moving opposite the overall market as of late. That won't last forever, but right now it's tech versus everything else. Berk.B just moved to the red because the market's stronger. Just the way this market is built right now. It's not going to continue to be built like that way forever, but you got to respect these relationships.
All right, folks, we're going to wrap it up here for pre-market prep. We're going to jump over into the STN room, stocktradernetwork.com. To get you ready for the open, we'll take a look at some of Triple D's overnight trades. We'll take a look at some imbalances. Again, we'll get set up for the open. We'll get you to that opening bell and through the opening bell. We'll be back tomorrow, 8 a.m. sharp, folks, for pre-market prep. Good luck today. Have a good day, everyone.